Today we are live. We're gonna be live in a few minutes. Um, so let's do it. As everybody knows, today is March 22nd, Sunday, and we're about to start our sixth video of our series, Invest Your Way to Financial Freedom, using our ultimate framework, which is a simple framework where everybody can use it. You can just start by make sure you increase your income. We already talked about those things. We give you a lot of tools before. If you haven't seen our video previously, please make sure you go on YouTube. You can see our series. So it's a simple a framework where you can increase your income while you decrease your expenses, and with that you have a surplus of net income. And using this net income, you can just directly invest to liquid asset, or you can combine it with debt using buying a liquid asset like real estate. So welcome everybody. If you haven't done so, if it's your first time, we welcome you. And definitely we want to make sure to remind people that our goal is to inspire the next generation of investors, so we can build a community where everybody can feel like, you know what, the financial freedom is at your reach. No matter if you have money or not, you can start small and continue to invest. So if you don't know me, I'm El Bozo from Gombit Group, and I'm here to help. And this is being a long series. I cannot believe we already in the fifth. This is the sixth video that we have going on uh, for this journey, and helping people to put the words out there so they can take their investing journey to the next level. And we are so happy and thrilled to be here today. And let's start. As usual, we want to start our series by explaining, what to expect, what happened this week, and what we expect next week. And also, we're going to talk about, our twist talk. And also, we have a big topic today, which is how to invest in the stock market, especially for our beginner investors. If you don't know exactly what's going on, if you haven't started investing yet, or you're not sure, you're already investing and you're not sure about the basics, because at the end of the day, we want to make sure you get the basic while you're investing. So for this week coming up, we just want to just kind of go talk about what happened. And definitely the main topic for this week, we're looking at, as investors, we always have to deal with what's going on in the war between Iran and the United States. There's a lot of risk associated with that, and we cannot ignore it. No matter what your political view about the war, if you agree, disagree about what's going on, we all can agree on the fact that a long war, we're only gonna lose people, and it's also gonna damage the global economy. So that's why, our investor, we hope this war end very soon, so we can continue, have more certainty on how to invest. It's a very difficult market, and I don't see this going easily. But again, as investor, we always got to be careful, and hope the best for now. And hopefully, our soldiers, we can say salute to our soldiers. If you're a veteran in the life, I respect you. We want our sailors, our soldiers to be safe out there. Hopefully, they come back soon. And we say our condolences to all the soldiers that have been lost in this current conflicts. Uh, yeah, so definitely we see the price of oil continue to go up. That's something that is gonna be continue. I don't see this going down. The price of oil gonna be going up until we have a better understanding where the war is going. Any peace that can shift the outcome of the war, that can definitely make the price of oil go down. Until then, I can tell you that we it's only gonna be going up. More uncertainty in the market. And if you are an investor who are investing, please be very careful right now. If you don't know what you're doing, make sure you have some advice from some professional, because this is not a time to just go ahead and just be investing without no clue. So definitely we encourage our investors. If you're following us, if you need some help, let us know. Contact us. You can contact us anyway, so we can definitely help you out. And also, another big news that we have during this week is mortgage rate. Especially for you guys, investors who are trying to get into real estate, buying your first investing this year or this, soon, is going to be complicated because, invest a mortgage rate for the 30 years fixed rate mortgage is about 6.30 according to bank rate. It's higher level this year according to bank rate national survey. Eh, Again, we see that, this have a lot to do with how everything that's going on in the economy, because you have inflation going on. If there's a risk for inflation due to the war, things are going high. The most important thing the Fed gonna be doing, not decrease rate, is gonna keep the rate higher so it can cool off the economy. But as we explained last week, now we have a market that's going down and inflation is going up. So again, this is very tricky, very uncertain. We are in a very difficult territory. By the way, shout out to our people who are in the live. We have XT line. We just want to shout out. We'll say, how are you? I'm feeling well, my friend. We are here despite everything going on. We are here trying to help everybody. The financial freedom, I can tell you, it's for all of us, no matter who you are, no matter where you come from. You just need the information, and that's what we're here for. And we're here to build a community of people who really want to take care of their investment to the next level. Um, Thank you, thank you. God bless you too, brother. So definitely we are talking about the mortgage rate. Make sure if you're investing, for example, this year in the housing market, make sure you close attention. I don't think right now is a good time to, you can do your research, obviously, but I don't think it's right now, it's a time to just jumping in the buying investment for real estate right now. As a real estate investor, and also as a realtor myself, I can tell you it's a very complicated market out there. So just be careful, guys. We hopefully we still have, we have the war calm down, and then we have the Fed now shifting to lower the rate. That's what we can hope. Hopefully that happen. But until then, being cautious out there. That's the best thing we can do about it. Just be careful. Um, so even though while the Fed doesn't impact mortgage rate directly, but the market have been navigating a wave of uncertainty that pushed the rate higher recent week. Not only economic growth slow more than forecast in the fourth quarter, but recent report with the Bureau of Labor Statistics show that how wholesale price increased more than expecting in February. So you got, the housing is still going up, price are going up, but not a lot of people are buying right now. So again, very difficult market to navigate, guys. Stay focused, be patient. Hopefully things get better. And now we talk about what happened this week. Obviously, we want to look at what's going on for next week. We think, first of all, things that as investors, guys, what we want to look for is obviously oil prices and geopolitics. It's always going to be the main problem right now. We got to deal with it. We got the Middle East conflict. Obviously, you know, oil price doesn't go up. And we also have to watch what we call a jobless claim. This is when the government report how many jobs that being lost. So definitely we want to make sure we pay attention to that next week. uh, it's definitely the report gonna come out by Thursday if there's no delay. So definitely make sure you understand when it will give us, the jobless claim will give us an understanding how the economy is doing. Obviously, we know it's in bad shape, but we want to make sure you pay attention how bad it is. So that's important. As investors, guys, we got to pay attention to those key economic report, because that's gonna affect how you invest in this difficult market. And also, definitely one of the most realistic time indicator of the economy is the jobless claim. Rising claim, that's mean a lot of people going unemployed, a weakened economy. You know, if it's stable or low claim, that's mean there's not a lot of people firing. Fed may stay cautious still. So definitely try to be pay attention to those type of report. And one of the other report that's coming next week is the consumer sentiment. Very important right now. It's probably come on Friday, guys. If you're paying attention to it, on Friday, the University of Michigan consumer sentiment might come out next Friday. It's reflect inflation. It will give you an idea of gas prices is the economy. Why is it matters? Sentiment is already dropping due to raising gas price, but with a weak sentiment, lower spending, meaning confirming that there's a slow growth in the economy. So as a whole, the economy, as we explained, is functioning together. When one part starts slowing, that's the time for you to be very cautious. So please be careful and pay attention to those reports that's coming the following week. Uh, and another, let me see, we have the chat. We have people in the chat. Welcome. If you first join us, we wanna encourage you to stay in. You wanna learn a lot today. We have a good topic coming up today, which is the stock market. Definitely this is the sixth video of our series. If you haven't seen the previous ones, we have six video now. This is our sixth one. So we got five videos that we explain everything. We break down the investment world. If you guys haven't done so, make sure you go on YouTube. You can watch those. And if you wanna make sure, if you want to definitely want to take care of your finances, take your journey to the next level, we will encourage you to be part of this series, guys. It's every Sundays now at 8 p.m. Central Time, so you're gonna learn a lot. So now we're gonna talk about like the twist stock for the week. As investors, from Combi Group, we have our portfolio and we look at what are the best stock for the week. Every time we give you an idea where we are investing, so you can take a look at those stocks. Obviously, we cannot tell you to buy the stock, but those are the stocks that we are buying. Those are the stock in our portfolio that are doing well. We just want to share it. At the end of the day, we want to share with you guys. It's about sharing. I want to learn from you guys. If you guys have some stocks that you've been buying or that do well for the week to you guys, make sure you drop it in the comments so also we can learn from you. Now we want to share with you the three best stock that we have, which is Chevron. Chevron is a oil and gas production stock. It's no surprise, definitely because of the price of oil is going up. It's about 2%, 2.4% the whole week for us. And we also have another stock called Applied Material. It's also about like 3% up. It's a supply company, software manufacturer who manufacture chips. It's also doing well for us. And the last one I can think of is the company called Swammer. The ticker is SWMR, which is a new IPO that came out. The company is a drone company, defense company. So they build drone. Those drones are used in wartime, like in Ukraine. Now they're using them. They're probably using them in the war right now in Iran. So there's a like very good. It came out this week. I don't know if you guys, anybody in the chat, if you have buy those stock this week, which is the Swarmer stock. If you have bought it this week, please let me know in the chat so I can know also people are paying attention to that stock. Definitely, it was starting the IPO. I don't know, for somebody who don't know what the IPO is the initial public offering. This is where the company first came out of the public market, and that's the price they come out with. So the IPO come this week at $15. It closed at $36. So think about it. If you have bought this a stock at $15, and one day you will end up getting a finish at 36, you double your money. This is the power, guys, of investing, guys. You are doubling your money. You can triple, quadruple your money. So there is no reason to not buying stock if you are paying attention. So definitely this a stock SWMR Swammer is the stock that we're gonna pay attention to opening Monday. So pay attention, guys, of what's going on in this stock. Now, let's go straight to the topic today. The topic today will be the stock market. We're gonna go a little bit explaining what is the stock market, what to, what is it for, and how to start investing in the stock market. So if you haven't started investing in the stock market yet, guys, make sure you let me know in the comment if you already did start investing. What are your strategies that you're using? Tell me the benefits of investing in the stock market for you. So definitely I want to hear from you guys. um so now, yes, so let me tell you something about it. Whatever I told you that you don't need to be rich to invest, but investing is exactly how people become rich. Right now, millions of people are working hard every day, but their money is not working for them, guys. Imagine, like, you just keep working. So many people that I know of, they just working every day, go to work, do the right thing, but they still become poor. They still staying, like, at the end of the week, nothing in their pocket, guys. Why? Because they haven't understand how investing can take their wealth to the next level. So today I'm going to show you what is the stock market really is in simple term. Again, we're not going deep. This is not a finance class, corporate finance class, where we're gonna be going crazy. We're gonna go explain in simple terms so everybody can understand it. We're also gonna explain to you why investing is one of the most powerful tool for building wealth, and exactly how you can start investing in the US stock market. And even if you start from zero, it doesn't matter. If your goal is financial freedom, this is the life for you. Stay until the end because I will give you simple step-by-step plan. You can start building your wealth today. And let me see. And so now let's simplify this. The stock market is not gambling. Like I say, don't listen to people who's telling you, oh, you're gonna lose your money. It's all a scam. I can tell you, I'm a very witness of what the power of the stock market, and that's exactly why I do this, guy. I do this because I am a witness of how powerful is the stock market. So it's not gambling, guy, and it's not just like numbers that you have on the screen and then you just plug numbers. The stock market is really a place where you can own buy ownership of real company. So this is real life. This is not just the computer you see on the screen. Like, what is this? Is like people buying ownership of a company. When you buy stock, you are literally buying a piece of a business. Example: if you buy share of a company, you own a small percentage of it. And if the company go, guess what? Your investment go. And if the company make money, you benefit. Think of it like if your friend open a business and you invest in it. That's literally what the stock market is doing. That at like global scales. So obviously there is risk associated with the stock market. If you invest, you own a company. If the company go down, you might lose your money. So that's the downside. But that's not just the stock market. That's any business, guy. So that's why it's important to be conscious about the stock market. It can go up, it can go down, but that's part of business. That's what we do as investors. We take risk on everything we do. And one thing that I can say is the key concept that we want to understand is, like I say, stock is ownership. Company raise money from investors. You have companies who gonna go, they look for investors and you buy like investors. Investing make money to price go up. Or there's two way you can make money in a stock. For example, if you're buying stock, you can go your profit can go up, your stock go up. So that's mean price growth or dividends. That's the dividends are the cash that the companies sell give you. That's like a sometimes it's a monthly payment or random payment that they just give you a side. You know, as your stock. This is not part of the stock. You have the stock money is there, but every time as the company make money, they give you some of the profit. So that's what we call dividend. In simple analogy, the stock market is like planting seed. Some go small, some go big, but over time, the forest build wealth. It's like growing a big a garden. You have to start the little plants, some big plants, but at the end, guess what? You're building a garden, but garden of wealth, guys. So stay with it. Stay with it. Make sure you learn. Make sure you are doing the exact step that you need in order for you to really understand how to make profit in the market just by investing. So now let's just a quick history about the stock market. Quick, they started in the 1800, very long time ago. So this is nothing new. By the time we have like the stock market where people were just like, maybe selling goods and exchange good, and that's where you start, doing businesses. So, and they go along building it to the 1929 when you have the stock market crash. So with that, they go to understand that a lot of problems were going on back then, so they create what we call the U.S. Security of Exchange Committee. That's the committee that help regulate the market, and they start having more protection. There's a lot of rules and regulation in the market to protect investors. Those are things that they have been building based on problem. Because guess what? The market is not perfect, guys. They still evolve. Every time there's regulation, people are gonna try to steal. People are gonna try to cause problem in the market, but the market gonna still going up. The markets need to be regulated. And we have, the market passed from the bull market, to the 20s into 2029 to 2020s. We have big companies going up. We got like the bull market. All this is transformative. At the beginning, the market was just guys on the phone and talking. Now you can be online, you can be on your computer and buying stocks. So things have become more modern and more regulation. So I can tell you, in general, consider the stock market like a big farmer market. I think about it like a big farmer market. Let's say you have a farmer market where there is buyers and sellers, and also they have like institution that can facilitate the transaction, which is the dealers and the brokers. So who are the buyers? So the buyers may be an institution. You have hedge fund. You have like retail investors. The retail investors, who are they? Like people like me who are doing the if I'm buying stock for my personal investment, I manage it myself. I consider a retail investor. I'm a buyer. So who are the sellers? The sellers are the companies, like, they are selling ownership of their companies, their stock, IPOs, like I told you, initial public offering. These are like when they just come in the market, they're selling those to the buyers. And they have what we call investment bank. Investment bank help the companies, the sellers, to go in the market. So how to structure their products and everything. So also companies, the sellers can also not just sell bond. They're not selling only stock, but also they can sell bond. But I think I did make in the previous video, I did explain the difference between stock and bond, guys. If you haven't understand those concepts, go back to my videos, on my previous videos on my channel at Bosso Bosondo on YouTube. Make sure you go back and understand the basic. Bonds are debt and stock are ownership. So make sure you understand those concepts. And now we're gonna talk about different type of stocks. There's different type. For example, we say stock a are, for example, by ownership. By ownership, you have two different type of stock. You have the common stock. This is the stock that when you go and buy, those are most popular type. With a common stock, you get voting right in the company. So when the company is doing their annual meeting to make regulation, get a new CEO, as a common stockholder, you have the right to make decision and to vote during those type of meeting. And also, as a common stock, the main problem is dividend are not guaranteed. You know, at this point, you're not guaranteed a dividend, and also there is higher potential of growth because you grow with the company, but also with that more possibility to make more also become more risky. So a common stock is become owner is also more risky. And now compared to a preferred stock, you might hear about preferred stock. It's usually you don't have no voting right. As a preferred stock, you don't have a voting right. But guess what? You have fixed dividend. A dividend is paid for you to you regularly. So again, compared to a common stock who is not guaranteed a dividend, as a preferred stock owner, you do have a guaranteed dividend every time they send you maybe a check. So you paid before common shareholders. So as a common stock, let's say if the common stock owners have a high risk, what happened with them is if the company go under, they lose all their money and they're not gonna get a compensate until at the end. Compared to a preferred stock owner, if the company go under, they're gonna sell all the company facilities or anything that the company have. They're gonna pay you first. That's why a lot of people think preferred stock owner is more guaranteed because you have less risks, but you have lower growth. So it's more money you do if you have a common stock. Um, so now let's say another way to classify stocks can be by size. So it's called market capitalization, and or other way is called market cap. What is the market cap? So to determine market cap is the stock price times the total share. It tells you the size of the company, not the stock price. For example, you might hear, as an investor, you might hear a lot people talking about large cap companies. So those are big companies. Usually they size $10 billion plus. Their evaluation is probably $10 billion plus. For example, of large cap can be Apple, Microsoft, Amazon. Those big companies are considered large cap company. And also another, you might also want to learn about a mid cap. Mid cap. Mid cap companies are growing companies. What about their size? They're between 2 billion to $10 billion in evaluation. Example, company going fast but not getting yet. So they are not giant companies like the Amazon, Apple, but they're going very fast. So they balance growth and stability. And you have medium risk. Often large cap company thinks next big. So this next step for a mid cap company is probably going bigger. So they probably looking at to go a bigger and faster. So now the third one will be a small cap company. What are the small cap company? Which is the one that's size evaluation wise 20 300 million to 2 billion. So they are small. They're still developing, guys. You might think about a startup and a niche company. The good thing about those small cap companies, the potential for growth is very high. Because the problem with the big and medium cap companies, at some point they get stuck. I mean, they can't go fast anymore because they already reached their plateau. They already reached their height. So it's gonna take a long time for them to continue grow. But when you have a small cap company, the advantage of investing in them is that they can go very fast. But the problem with them is that they have high risk because they're not developing yet. There's still a lot of volatility when it comes to investing in small cap. For small cap, think like high risk but high reward because at the end you can still make a lot of money on with them if they take off. Also, different ways to classify a stock is become by growth style. For example, you got growth stock. Those are companies that going fast. They reinvest the profit. Usually don't pay dividends. So the growth stock don't pay dividends usually. Higher risk, higher reward. And also compared to value stock are undervalued company often pay dividends. They are more stable. The value stock. Other classification in stock is by dividend stock. The dividend stock, if you hear about the dividend stock, they pay regularly income. Those are like probably quarterly dividends, like we talk about. Good for passive income. Those stock are giving you some money. You got some passive income. Common in utilities, bank, telecom. So those are the type of stock that usually give dividends. And one of the common stock that give dividends, we got Coca-Cola. You have stock like Verizon. They sometimes pay good dividend stock. Also, you are a stock are classified by industries. For example, sector stock and industries. You can have stock by technology, healthcare, energy, finance, consumer good. Example for tech stock, the high growth, energy stock tied to oil and price. So definitely you want to make sure you understand the different type of stocks and how they classify. So while you start investing, you can definitely be more strategic about what type of stock you buy. And also stock can be classified by a location. For example, domestic stock are based in the country, for example, in the US. International stock can be outside of the US. And emerging market stock can be just from developing countries, and they are usually higher growth, higher risk stock. If you're investing international outside of your domestic into emerging market stock, those are very risky stock because they probably don't have the same regulation that you have in the US. And lastly, there's other type of stock, for example, blue chip stocks. Those are big, well-established company, reliable and stable. You might also hear about penny stock. Definitely, they have to do with, like we mentioned, small cap stock, which is very cheap. You can find them under $5. Very risky and volatile. Defensive stocks are the one that perform well even more into a bad economy. For example, stock like food, like Walmart, healthcare. Those stocks are really like they easily to navigate even when there's problem in the world because people still got to eat. People still got to be taken care of when it comes to their health. So healthcare, food, for example, they consider as defensive stock. Cyclical stock, that's also another term that you might hear from the economists when they're talking about it. Cyclical stock depend on the economy. For example, travel, luxury goods, those are the stock that change over time with depend on where the economy is going. Simple way to think about the different type of stock is safe and steady. You want to do blue chip, dividend, large cap. If you're looking for growth and aggressiveness, you want to look for small cap growth stock. And if you are mostly focused on income, you want to look for dividend and preferred stock. And for high risk a stock, it's mostly for penny and emerging market. So those type of stocks are the one that we're gonna give you more higher exposure to grow your income, but again with higher risk can be higher income. So you got to make sure you understand the different type of income. The reason we spend time today to talk about the different type of income is that you want to make sure you understand them so you can strategize as much you can so you can take advantage of the different type of stock. Now let's talk about why does it matter to invest in the market. For example, as investors we know that very well inflation is destroying your money. If your money is just sitting in the bank, it's losing value every day. I think we talk about that. Investing is so important. It's the edge against inflation. So if your money still sit in the bank, guys, it's devaluing. So it's very important for you to understand that part. Inflation is killing your money every day when it's sitting in the bank. And one of the powerful benefits of investing in the stock market is compounding. That's the real secret, guys. Compounding is when your money is making money, and then that your money make money even though you're not doing anything. For example, you're investing $1,000, you earn 10% yearly over time, exponential growth. Time is more important than timing the market. So your money keep growing, guys, even if you're not doing anything. So the compounding effect is one of the most powerful benefits of investing in the stock market. Wealthy people invest. Why? The biggest difference between people who struggle financially and those who don't is that the wealthy people own assets. Like I always say, asset, those are things that make you money, like stock, business, real estate. So you really want to make sure you understand those concepts, why we invest. And also, one last thing is financial freedom. Financial freedom is when you invest and it's pay your all your expenses, so you are no longer trading time for money. So definitely looking into investing in the stock market, it will give you that edge that you don't have to be worried about your job, who's like how things going, if you're gonna get fired or anything. You just got to stay invested and your money is growing exponentially. So now we're gonna go to a second part of our topic today is how to start investing in the stock market. So let's get practical. This is what you came for. So if you want to hear a little bit more about how to start investing in the stock market, then we wanna start by saying first thing you have to do is beside all the knowledge that you need to have now, if you're ready to start investing, the first thing you want to do is open a brokerage account. You need like a platform to invest. So you cannot just before you cannot just go somewhere and then just say, oh, give me a stock. You have to go online. Most everything is now is digital. So it's not like the old days when you have to buy things, you have to write things down and go to the bank or get no. Now everything is online. So what you need is a brokerage account. So you can have there's two different type of account, which is you can have an individual account and you're gonna have a margin account. An individual account is what you have there, it's what you get. You cannot invest more than you have. So but in a margin account, you can have it's like you borrow money to invest and then you give back the money back. But the problem is, margin account is not for beginner investor, guys. Margin account is for people who are already being invested, who are making money, and then you want to grow because you're gonna borrow money on your margin account. If the stock go down, now you have more risk to own more money than you gain. So definitely looking into open a brokerage account to start investing. The popular brokerage people that account that we have, for example, you can open a brokerage account to invest in Fidelity, Schwab investing, Robinhood. So those are like the different common platform in the US people use to invest. For example, those companies, the good part of it is that most of them don't charge you. They don't charge you to buy or sell stock. That's one of the things that I think people are misunderstood when it comes to those platforms. Guess what? You can just open an account and nobody is charging you. So you're making your trade and nobody, if they're not charging you, why don't you take advantage of investing, guys? You know, for stocks and ETF, it's $0, for example, in Fidelity or in Schwab or Robinhood. So there is no reason to not investing, guys. You can invest in $2, $1, depending on what stock you buy. They're not charging you. So at the beginning, when I started investing, I thought they're gonna charge me for every single one investing I do. Yeah, there is platform like that will do that, but if you open an account in Fidelity, Schwab, Robinhood, they don't charge you if you're trading stock. But now it can be different if you're trading auction. Auction can have like fees. For example, almost all of them will charge you for auction, but guess what? We're gonna talk about this more later on. Maybe by next week Sunday, we're gonna talk about auction features and stuff. We're gonna see what it come down to the payment. So That's for later. But I'm just want to let you know, just buying stock or ETF, nobody's charging you. Those three companies are not charging you. So for for example, for long-term investors, I will say, you probably want to open a Fidelity account. If you haven't done so, it's for long-term account holders. If you, well, beginners, maybe you want to try a mobile user-friendly like Robinhood. Now, understand what to buy. Start simple. It's very important to understand like what type of stock you're buying. Are you buying an index fund? An index fund which is for best for beginners, it track the bull market, low risk compared to individual stock. So if you're buying a index fund like S&P 500 index fund, it's very safe for beginner investors. Again, when you start small. Don't be buying leverage and then spending too much money. And also another things that you can buy is what we call ETF, is the exchange trade fund. It's similar to index fund, but easy to buy or sell. We already went to those a definition to those type of stocks and investment last week. So if you haven't seen it, if you don't understand the term, go back to the videos that we have. So make sure you understand this concept. Uh, Again, individual stock, you can buy this. This is ownership in the company, higher risk, higher reward. When you buy individual stock, you have the risk of losing it. So make sure that's why it's very important, guys, to know what stock type and to have a good strategy when you're buying individual stock. And another step is to start small. You don't need thousands of dollars. We explained that so many times in this series. You just need to start very small. But the most important step is to start. When you start, you're going to learn a lot. Be cautious, but as you go, build your strategy so you can progress. And not the fourth step will be consistent. Invest regularly. For example, you might want to invest weekly, bi-weekly, monthly. It called the dollar cost averaging. If you want to buy every week, just stick with it. Just invest every week. If it's bi-weekly, depending on what your check is, you can put some money aside. I would say 20% should be investing in the stock market as you build your investment portfolio. Think long term. The strategy is always at the beginning. You think long term. The stock market, we were patient. So this is not a quick get rich thing. Don't listen to. We always say don't listen to those gurus online who's telling you they're making millions of dollars in a couple seconds. It can happen. It might happen, but it's not the time. Those are people. The real people who's making those type of money have been doing it for so long. So this is not day trading or quick money, guys. Day trading, like I said before, it's for people who've been doing this for long term. But investing, especially in the stock market, make sure you think about it long term for about 5 years. Have a 5, 10 year plan, when you start investing in the stock market. So what is the stock market? Investing is not. It's not trying to get rich quick. It's not investing without understanding. Don't be panicking selling the market when it's everything dropped. Not following, try to not follow the social media, the hype. We want to stay focused because guess what? The market goes up and it goes down. But over time, you have always gone up, at least a 8% yearly going up. Imagine your money is going 8% yearly. It can go like 50, 100, 200%, depending on the stock, but on the basis, in a regular basis, the stock market is going up at least 8%. But guess what? Compared to if you put that money in a CD, they're giving you 2% annually. So it's definitely, even though there's some risk there, higher risk, but it's a good risk to take because if you look at historically, it's tend to go up about like 8%. So there's no reason not taking advantage of that. Now, let me leave you with this. You don't need to be perfect. You just need to start. So for this week, I will encourage everybody, if you haven't done so, you gotta open a brokerage account, invest your first $100, stay consistent, and you will be happy to see over time your money is going up. So the key for me is to start small, stay consistent. If you learned something today, type invest in the chat. And if you want more content about this type of topic, definitely make sure you follow us, share the live. And if you have a question for us, make sure you have it for us in the chat. We'll do our best to definitely answer some question. And I can tell you, your job pay you, but investing build your future. Start today because your future self is watching. Your future self will be happy with you in a few years just because you start investing. So now we are very happy to continue this series. This is a investing your way to financial freedom. If you're about investing, you want to take control of your life, make sure you stay with us to our this series. For next week, we want to go deeper. For next week, next Sunday, it will be Sunday the 29th at 8 p.m. Central Time. We're going to be really discussing, definitely we're going to talk about the fundamental analysis that you need to do before you invest in the companies. We're going to talk about the balance sheet, EPS, EBITDAs. It's going to be a little bit more technical. Like we're going to come up with more like financial term that we usually don't want to, we as investors, the basic, we will need the basic terms. Like we're going to be analyzing next week, we're going to be analyzing company revenues, the balance sheet, so we can make decision. Because we investors long term, we make decision based what we call the fundamentals. What are the businesses doing, how they're investing, what is their spending or telling us. So if you into investing your way to financial freedom, make sure you come next Sunday at 8 p.m. Central Time. So if I hope everybody a good week. I hope you have enough information for tonight. If you want to continue with our series, please make sure you also like and subscribe. Look at our YouTube channel, our YouTube page, so you can learn more about, invest your way to financial freedom. This was a pleasure, and I see you next week. All right. Thank you. Bye bye.